that Today's Monday, right? May 12th. And I want to explain how I passed another combine today, right? Even though we did see quite a lot of consolidation, but we still have liquidity on the upside, which I called out for you in the Discord, right? So if you're not in the Discord, what are you doing? You know what I mean? Like, what are you doing? Because today's price action, we did talk about this consolidation in here, which a lot of people, you know, that looks like hell, right? But passing a combine, that feels pretty fucking good, right? What I gave you, okay, I messaged a lot in the Discord today. Not a lot, but quite a bit. And one thing that I talked about, I think the most important, not just timing wise, but message wise and bias wise, I was talking about Dow and something related to that, and then Dow was absolutely garbage. But what I did point out, because one of you was trying to short, and then I was like, on fucking everything, I would not do that. I just didn't say anything. I didn't want to be an asshole. But it's like, we have highs, right? We have highs up here. Why are we going to short? I'm not going to short. I'm going to long. So that's when I came in at 1023, which is right here, saying I like NQ highs at 20,850. Now these highs are actually at 850 and a quarter. I think the micros might be at 851. So you have to give me a little bit of unprecision, I guess, on the price level, but you get what 850 is. Look right there. Those are the highs. Okay. That's what I'm looking for. So I did message on purpose here, like during this time window, and there's a reason for that. And that's what I'll explain. Okay. And yes, I did record the whole thing. That's why I'm going to clip this, because I want to make it into its own standalone video. All right. But what do you think it was? Before I tell you, what do you think it was? I mean, hell, I gave you some things in the screenshot. We have, what do we have? 20,816 and above would be a partial from any longs this morning, period. Okay, so that just by itself, what's at 816? Well, 815 is this particular high right here, right? So why would that high be a partial? Why would 815 or 816 be a partial? Because that is a distinctive high below the target, right? If you're trading multiple contracts long, we want to take a partial at a new high, or if we're short with multiple contracts, we want to take a partial at a new low, right? I only traded one contract today though. That was just an ego thing. I was like, I could double up and only go half, but I was like, nah, you got to lead by example. So I'm like, all right, I'll target the highs and go with that. So 816, that would be a new high because we traded lower and lower. 11 o'clock is also very, very important. And we overlap Dow. Okay. What's like the very first thing you notice? Like when you look at Dow, bro, what is the first thing that you notice about it? Okay, if we're looking just at price, you know what I'm saying? What's the first thing you're like, oh my God, bruh? What's the first thing that jumps out at you? Nico says Dow is weaker. Okay, but what makes Dow weaker? What makes it weak? Other than that, that's just normality. Dow is just ass always. Like 99% of the time, Dow is garbage. And I did point out Dow highs too, by the way. Naruto says Dow 11 a.m. low is a lower low while NQ is at a higher low. Yes. Low taken / divergence. Yep. Lower low, divergence. Ibanez says bruh. But anyway, yes. Dow makes a new low of day right around 11 o'clock. And this is very, very good. Wow, 2020. This is a very, very good indication that Nasdaq is stronger. When you have a new low of day, right? When you have a new low of day on one, but the other is like maybe, I don't know. I wouldn't really look at a specific retracement like 50, 618 or nothing like that. But I would just say, look at its relevance. If we're looking at the body, that would be here. And the body closures up here. It's not even close to its low. It's not even close. So what do you think would be an add-on or an entry in here? This is the part where a lot of you are going to be like, oh my God, John, I missed it. How did you miss it? I fucking gave it to you, bro. I literally gave you the price levels before we got there. How did you miss it? I don't know, John. I'm just a goober. We got to fix that, baby. What do you think presented itself? 1, 2, 3. So what is that? Judas model. Oh. What about this imbalance? What about that? That is the imbalance right after what? Strength. Okay. I know we got a lot going on here, but just do your best, okay? Just do your best. Dow makes a new low of day. That's manipulation. NQ accumulation. So we want to trade the next available entry. You got a Judas model and like an imbalance right there. Heading towards what? 850. I gave you that at 10:23. This was at 11 o'clock. You had over 30 minutes between when I pointed out 850 and that Judas model. Done. You know what I mean? Like, I don't have a signal service, okay? I do not charge for signals. I give them to you. Do you understand that? I don't even charge for signals. I give them to you. Come on, man. I may not tell you what price level to enter and where to put your stop at. I don't do that. But I do give you directional bias, okay? And I've already given you models. The inversion model, the imbalance model, or one of the imbalance models. It's an imbalance on the way to opposing liquidity. Easy. Okay? Then, once we got 816, I had this message already typed out. And then once we got that, that's when I hit send. So I said this would be a partial. 851 is still the target for liquidity. 866 would be the imbalance above it. That's why. Okay, so let's get Dow off of here because we're getting all we're getting cluttered up really bad. We have liquidity at 850. All the time. All the time. I'm asking you, how far can price go below lows or above, highs or equal highs or whatever? The next available imbalance and or the next available 0, 20, 50, or 80 level. I mean, I guess 880 would be appropriate, I guess, but 866 was just the low end of this imbalance. And then if you were really trying to swing for the fences, 940, which is up there. I wasn't trying to do all that. And we stopped shy too, so that kind of sucks. But anyway, that's why. Okay? Equities open is here. As soon as we got our equities open today, market shit the bed. Market shit the bed. Okay. Do we need a new high of day to be profitable? Equities open is here. Do we need a new high of day to be profitable? No. You don't. All you need is to close a trade. If you're long, close the trade above where you bought it. And that's a profitable trade, whether it's 2 points, 20 points, or 200 points, right? So again, we don't need a home run or a grand slam. We just need first base, second base, third base, then maybe a home run. Okay? Do you ever like stop and think about why I would give you multiple price levels? Like honestly, have you ever thought about that? Sometimes, usually it's just one level, 850, and that's it. But today I was like, you know what? This would be a partial. That's still the target. Here's another target above the highs. Do you know why I do that? To lead by example, to teach you with real price, with live price. Because those are all targets, either for partials or for holding, right? Because I know what happens. A lot of you see the equal highs, and then that's when you get out. One tick, boom, you're out. You're out of there. You're like, yo, I'm done. I held a trade through all this bullshit. Finally got the expansion. I got the hell out of there. One tick above the high, and then you're done. No, you can hold for more. You can hold for more. Okay? How do you pass a combine? How do you grow an account? How do you make money? And there's that old adage, you cut your losers short and you hold your winners. The problem is when you don't have the emotional maturity, if I can say that, the emotional maturity to actually hold on to trades. But the reason I think a lot of us, I say us is just, you know, everybody that's a developing trader, okay, is we don't know technically how far price can go above a high or below lows. And so we get anxious. So number one, April 6th, 2025. This is potentially going to be probably for this year one of the greatest tweets, or maybe the greatest tweet ever for me. Okay? Best times to buy long term. Okay? Long term. Which means day trades. Can we look for shorts? We could. We could. But what have I been talking about the last 2 weeks? Stop being the salmon. Stop being a salmon. Swimming upstream. For what? For what? You make it harder on yourself when you go against the higher time frame bias. What has the higher time frame bias been this entire time? But what would be the next available target in this price leg? That. March 26th. The high of that Wednesday. We gapped up this weekend, or over the weekend. And then we're launching for what? For that. Okay? You see that? Distinctive high in this price run lower. That's the next available high. Easy. So even though we already met that, because again, one of you asked like, oh, what is all this shit about London? Okay. Sunday/weekend gap, right? I'm not going to short into that. What happened at London Open? I don't know. London Open. Maybe there was news, maybe there wasn't. I don't know. I don't know. What I do know is that we traded into it at 9:30. See that? Okay, I know I got a lot of all that shit over here, but 5-minute time frame. Okay, there's our imbalance. Okay, move it over. Just move it over. Right? Look what we traded into this morning. A low at 842, rallied, left a high, left behind a very, very slightly lower high. Then we traded lower. Okay. Did you guys see the entry that I posted? Did you see the entry that I posted? It's okay. If you didn't, I'll show you anyway. Okay. Look at that. 1, 2, 3. Well, 2 minutes beyond the low of the day. Right? Why would I do that? Well, look at it. What is that right there? What's that right there? What's good, Sergio? What's that? What is that? You have a candle here. You have this candle here. And then you have the low of the day candle here. Now, at this particular time, I don't know if that's going to be the low of the day. That's where the risk is. The risk is from this inversion to that low. Low risk. What? High reward. Trading, people make trading so difficult. It doesn't need to be. Okay? This is a model I already gave you. I gave it to you for free. I gave it out to the public for free. I said, you know what? People need models because these whole down candles, up candles, you know, are like fucking you up, man. All these breaks of structure. Yeah. Look what happened. Where would you have entered if you were waiting for a break of structure today? Where would you have even entered without taking significant drawdown? I don't know. But by the time you're looking for entries, I'm already in and up. So, come on. It's the inversion model. We took out a low. We traded into this fat imbalance from London's open, right? And we have not one. At the time, I only saw the one, though. I don't know why I didn't see that up there. I was like half asleep, you know? What do you expect from me? Okay. Low, lower low, imbalance. Okay. That becomes an inversion immediately. Targeting these highs, imbalance above it. And again, if need be, a home run of some highs up here. Okay. But look at that. Even I still think we're going to get that. But even if we didn't, right? The whole idea is you don't need the entire day's range. Okay. You don't. You do not need the entire day's range. Half of it, maybe even a quarter of it. What you need to do, not financial advice, but what I look to do is just grow the account. Take good trades and grow the account. And that's it. Inversion model means what? Enter there, stop at the low, partial at a new high. Do we have a new high? We have one right here. That's so close to the highs, though, that would be silly. You'd be a silly goose to do that. We don't get an established high until there. Then that's a partial. And then, like I already said, everything else, the other two targets, the highs and the imbalance. So if this is our target, okay, and we do have a stop run, right? Or a raid, rather. Because this is a run, meaning it would continue lower. A sweep is a reversal. I know sometimes I confuse the language, but technically speaking, a liquidity run, this is basically a liquidity run. This. Because it hits that liquidity and runs it. Versus a liquidity sweep, which is here because it trades below the low and then back above it. So it's grabbing liquidity. Okay, so there's kind of a sidebar for you. That's not what I want to go over, but I know a lot of you are new. There's a lot of language. The language is very important. And again, I've always used the two terms interchangeably, and that's been wrong. Okay, so just to make sure we're all on the same page, a liquidity run is this. Okay, a liquidity sweep is this. All right, just so we're all aware. One is a reversal, the other is a continuation. Okay, so that is worth noting. All right, now to the fun part. Because again, I recorded this entire thing. You're going to see multiple markups. You're going to see where my stop is at, when I decide to move it. And I'm telling you everything before I even do it. I'm waiting for this high, then I'm going to move da-da-da. I'm waiting for this, and boom, 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 boom. I'm going to get funded if we hit this. Okay? Probably arguably the best recording I've ever made. And this is what you're going to see, okay? You're going to see, I actually started the recording like 1 or 2 minutes after I entered. I wish I would have started beforehand, but I wasn't really thinking about it. I was trying to take a fucking good trade. I wasn't really worried about you guys. So, anyway. That's the imbalance model, right? Or the inversion model, sorry. That's the inversion model. Okay. What do we start to print going higher? What do we start printing here? What do we got? What is this? What is this? Be specific, chat. Language matters. Coming from someone who cusses a lot, right? Language matters. The details matter. So what specifically is this one down here? Why would this be a breakaway imbalance? What makes that one different from this one? Why can't this one be a breakaway imbalance in the way that I view the marketplace? Okay, yeah, you guys are on it today. First imbalance. Well, Felix says first imbalance on the way to liquidity. I'll allow it. What Naruto said is basically how I gave it to you. First imbalance in a reversal as part of a reversal. This is the first one. So the first one, okay, a lot of people don't teach this to you. I do. The first one typically is a breakaway. It's not always. Sometimes price does trade into it. But what I am expecting is for the bottom, the midpoint. Ideally, I do not want price to reach the midpoint. It can. Ideally, I do not want it to trade to the low end. Okay? So where do you think my stop is going to be after we get a run? Where do you think my stop loss is going to be? Where do you think it's going to be? Down here. Just above my entry. That midline is really kind of in the way, isn't it? Okay, so I'm entering. A little bit of drawdown, not a big deal. Does it get close to my stop? No. No, not even close. A few minutes go by, boom. We get about 75% of the way to these highs. Am I going to jam my stop to that low? Absolutely not. Absolutely not. Am I going to jam my stop to the low end of this imbalance? No. I leave it where it's at. I leave it where it's at. Okay? Now, why? Why would I do that? I don't know. I just do random shit. No. No. That is not the case. What you'll see in the video is I extend these out. Okay? I extend these out. Why would I not jam my stop to a low like this? Even though it's in a discount. Why would I do that? Because that's exactly what it is. It is a set of lows below 50%. It's in a discount. So what is likely to happen? If we have manipulation over here, we have no distinctive lows in here, but we do have it here. That means anybody like me who's long at the low of the day, they're going to jam their stop to a recent low to try and lock in, right? Okay, at 1023. What do you remember about that? This is where people start to miss. Okay, I gave you at 1023, I gave you the highs again. But what are we doing? Okay, don't get lost in the sauce. I gave you this earlier. What are we doing right here? I actually gave you the answer earlier. Don't miss it. At 10:23, what are we doing? Look at what you've got going on here. Look at what you've got. Below a new 5-minute candle. Oh, that's probably true. Well, 23, that'd be 10:20. Okay, I'll allow it. Not what I was looking for. What else? I literally gave you the answer a few minutes ago. What did we talk about up here? What did we talk about up here? We established this years ago, chat. Years ago. How far can price go above highs? An imbalance. How far can price go below lows? Oh. An imbalance. Boom. Oh, how fucking hard is that? How hard is that? Why slime, baby? Buying below old lows in a market that's bullish. Other traders are getting out. I want to be getting in. Well, hold on. Wait a minute, John. You're not in here. You didn't enter there. No, I didn't. I'm down here already. So I'm very well protected. Could I add on there? Sure. Didn't want to. I wanted the one and done. Okay? That's why. We're trading below a set of lows. We're trading into the higher imbalance, because in the video you see me say higher and lower, and then I changed the lower to breakaway a little bit later. Something like that. We're sweeping internal liquidity to run to internal liquidity. Does that sound familiar to you? The markets trade. Oh, yeah, that's right. The 4 ways. The 4 ways. Oh, yeah. I forget which law that was. The 4 ways that the markets move. Liquidity to liquidity. Oh, imbalance to imbalance. Oh, shit. Imbalance to liquidity. I forgot what the 4th one was. What did we say? Liquidity to liquidity. Liquidity to imbalance. Imbalance to liquidity and imbalance to imbalance. There we go. Okay. Now do you see why there's multiple models? Now do you see why there's certain ways to move your stop? You can move your stop loss. You can trade one model, but move your stop loss and manage your trade based off of other models. Whoa. What did he just say? What did he just say? You can trade one model, but have and manage your stop based on other models. Yeah. You don't have to make it that complicated, but think about it. After we get a new high, I move my stop to this low. Why that low? Because we already ran liquidity here, and we got the Judas model in here. And since we made a new high, that is a very strong indication that we're getting ready to run these highs. So now I want to lock in something. And now I just wait. And then a few minutes later, boom, funded. Literally, it's that simple and it's that easy. Okay? So just to give you what I guess I was looking for. I mean, I always freestyle my stream, so, you know, I just do whatever I want to do. But I'm trying to give you the details here. When you have 2 imbalances, you trade the first one with a stop at the second one. You see how easy that is? Trading below an old low on the way to opposing liquidity. That's an easy entry. I'm already in. I don't need to enter on that. Price does consolidate for a little while. You're right. It does, Lee, right? I know you said that earlier, and I don't like it either. I don't like it either. But when you're in from the low of the day and price is consolidating, but Dow is trading lower, you're in the right index. And then once Dow sweeps and now is ready for a reversal, well, guess what? NQ is going to take off. And that's it. Okay? That's it. Like clockwork, Jordan. Like clockwork. Let's go take a look at Dow for a second. Okay. I told you those highs look juicy. That one of you pointed out those highs right there. I said, yeah, those look juicy. But this is where I can't fucking stand Dow Jones when it does this shit. Because what I was looking at the same exact time as Nasdaq, I was saying I thought about trading Dow. I was like, I'm going to trade Dow here instead. And I didn't. And thank God, because that would have been ass. Same model. Inversion on the way to low resistance highs. Beautiful. It does offer a new high here as a partial. And then this is where trading the Dow sucks. Because it doesn't give you your target. It goes all the way back down below the low that you didn't think would get hit. And then it gives it to you. Right? You're like, oh my God. Are you serious? Don't you guys hate that? Drop some threes in the chat if you guys hate that. You get stopped out or you get break even and then it runs to your target. And you're like, bro, it is the most frustrating thing ever. You know what you're doing. You know what you're looking for. But a simple little mistake and you miss the whole move. And you're just like, you just want to like punch a fucking baby, dude. You're just like, man, this is horrendous. Look, it's happened to me too. That's why I gave you guys that whole mindset of like, hey, well, a break even's better than a loss, right? It is. It still sucks though. 11 o'clock. That's where we got our divergence. Because again, it makes a new low where Nasdaq does not. Perfect. We have some lows here. Takes the lows, runs right into that imbalance, runs right into that down candle as well. Right there. Boom. Look at that. Look at that. Beautiful. In hindsight, I've shown you, yeah, Jordan, I've shown you trades like this. I love trades like this. I do. I love when it takes the low risk buy, and then just smooth sailing right into your target. I love that. What I don't love is this. Like you get a good trade, almost goes to your target, and then you like break even if you didn't partial. That's the worst. And that's why, again, this was like almost 2 years ago. You're more than welcome to go back into my YouTube channel. And I gave you the rules. I gave you the top 10 smart money trading rules. And one of them is you trade the leader, not the laggard. Right? That's why. Okay? That's why. I'm looking at Dow make a new low of day, and it's like, I literally thought that was going to be it. I thought that was going to be it. It wasn't. So these are good chances to re-enter, but like missing out on that blows. So why did I go with Nasdaq? Well, if you remember what I was saying in the Discord all day, I was saying Dow's making a new low, Nasdaq isn't. I put that in the video too, saying NQ has the strength. Now we just wait. Boom. So you literally get in today's record. Well, I'm going to try and I got to edit this clip, put all that shit together, put a song over it. But you see me literally from here. I start recording right here. We see it go up. I don't move my stop. We just wait and we wait and we wait. I have some other commentary. Like, I'm not even going to tell you what I said. I want you to watch it. And then you see me manage the trade accordingly. But those are the kinds of things that as a mentor, I wish people would have told me how to do. When should I move my stop? Why should I move my stop? You know, where should my stop be in the first place? All these ideas. I had to learn over time. I had to learn through trial and error, which sucks. I mean, once you get it, you get it. You know, once you're in Candyland, you're not sweating it anymore. But it's a bitch to get there. You know what I mean? By yourself. And this is why I give you these things. I give you the targets before they get there. I give you some commentary saying Dow is dookie shit as per usual. Nasdaq is the stronger one. And then it literally presents a model I've already given you, the Judas model. Like, bro, how can you not learn being here? How can you not learn being part of the community? Even if you're not part of the community, just watching my YouTube for free, how can you not learn? How? Shit doesn't make sense. The first funded account I got funded on a Friday with Nasdaq. This one I got funded with Nasdaq on a Monday. So there might be a lesson in that. There might be a lesson in that. First time I got funded was a 5-minute imbalance. Today, it was a 1-minute inversion. Both longs, both targeting equal highs or low resistance highs liquidity. There might be a lesson in that. I'm just saying. There may or may not be a lesson in that.